So we are saying that a partnership is never taxed. It is the respective partners who are taxed on income from the partnership. It is the respective partners who are taxed on income from the partnership, together with other incomes, together with other incomes. As per their profit and loss sharing ratios. So very important. Partnership on its own is never taxed, but whoever is taxed on partnership is the respective partners. That's why I always say that if you start up a partnership, there is no difference between you and the business. It's not a separate legal entity. You can be sued for the losses or for the debts of the partnership. Then I continue by saying computation of adjusted partnership income is done in the same way, just like any other business, except that, except that no transaction between the partnership, no transaction between the partnership and partners is allowed. There should be no transaction between the partnership and the partners. What do we mean by this? Number A, salary to partners is disallowable expense. So salary to partners is disallowable expense. Number B, interest on partners' capital is disallowable expense. There should be no payment to the partner. After all, profit ni yao, waende wagawane profit huko. So interest on partners' capital is disallowable expense. Bonus or commission paid to partners is disallowable expense. So bonus or commission paid to partners is disallowable expense. Then of course, interest on drawings. Interest on drawings paid by partners is non-taxable income. It's non-taxable income. The above items are, however, distributed to partners, to respective partners, in the allocation schedule. In the allocation schedule. So there should be no transaction between the business and the partnership. But after all that, whatever the five that are here, we now allocate to respective partners in the allocation schedule based on their profit and loss. And of course, they'll share the profits and losses accordingly. Great. So let's see these other questions. This question that we had just opened. I think I shared the past paper. You have the past paper, right? Did I share the past paper?
Ada. Hello.
Hi.
What did you say?
Did I share the past paper?
Yes, you did.
Okay. So let's just check this question of December
Okay.
2023.
Okay.
Question 1B.
Okay.
That question reminds me, let's have an NB first of all. Again, tungeweka huko juu, but sasa tuweke, the most important thing is that we get the notes. So another point that we need to know is on legal fees, legal charges, ama legal fees. Legal fees ni sheria imedictate. The act dictates which ones are allowable, which ones are disallowable. So the act already dictates which legal fees are allowable, which legal fees are disallowable. So we can just talk about allowable legal fees include allowable legal fees include legal fees relating to legal fees relating to so we have legal fees relating to, just a minute. So number one, you're having legal fees relating to a full stops mbili. Number A, settling customer disputes, settling customer disputes. So if you have to incur some legal fees to sort out issues with the customers, that will be allowable expenses. Number B, recovery of bad debts. Have to incur some legal fees to recover the bad debts, that will be allowable expense. Can have another one. We have legal fees relating to securing business deals, stroke, negotiating business contracts, na incur some legal fees kutafuta biashara, hiyo itakuwa allowable expense. Can talk about another allowable expense. We have preparing of employment contracts, preparing of employment contracts, another one, preparing and renewing, preparing and renewing of lease agreements, lease agreement of up to 99 years. The preparation and renewal of lease agreement of up to 99 years, that legal fees that you're incurring will be allowable expense. Can talk about successful defense against an alleged successful defense against an alleged breach of contract. Alleged breach of contract. So it must be successful defense. You know, what tunasema kuwa it will be a genuine expense if you could not, if haungeepuka. And that's when you look at all that you're doing here, the expenses that you cannot run away from. Successful defense. Remember, breach of contract will only be successful if it was an allegation. If you didn't commit any crime, then you succeed in it. If you fail, if it's not successful, then it means you made a mistake. That's why you had to incur that cost. So a mistake was on your end, so you have to pay it, but KRA huwa anasema hiyo expense ambayo umelipa ulikuwa na vile ungeiavoid. If the answer is yes, then that expense inapotelea mbali, disallowable. If there's a way you could not run away from it, then it becomes a genuine expense, allowable expense. Then skip one line, then talk about disallowable legal expenses include. Disallowable legal expenses include then you use the same concept, legal fees relating to number A, transfer of fixed assets. Transfer of fixed assets. Stroke capital items. Transfer of fixed assets, stroke capital items. Number B, preparation and renewal of lease agreements of over 99 years. Preparation and renewal of lease agreement of over 99 years. So lease agreements of above 99 years, preparation and renewal of it becomes disallowable. Up to 99 years, allowable. Above 99, disallowable. Another one. Court fines and penalties. Court fines and penalties. Another one. Settling tax disputes. Settling tax disputes. And any tax related matter. Settling tax disputes and any tax related matter. Another one. Raising funds from any source. Raising funds from any source except through issue of ordinary shares for general public subscription, except through issue of ordinary shares for general public subscription. So I think that is it. Uh, those are a few that we are supposed to look at. Uh, Try looking at this question for give me some 10 minutes or so to have a small breather, then we can look at this question tuone kama tunaweza ijibu. December 2023, question 1A. Can give each other a breather of like 10 minutes. Alafu ndo tuendelee.